Hey, traders, welcome to the stream. Good to see y'all again. Where it was not number go up today, thank God. It was number go down. And sorry, I'm on Bud and Anheuser-Busch right now. Sorry, let's go to Bitcoin. Daily, it's just kind of like you can see that there might have been a range here. Still in the range. You got to break 27.6 till till that happens. And look how I adjusted this down sloping resistance. What was really going on? Candle high close from May 15th. Too many touches, May 17th, that validates it. And then here we go, right? No break of that level. So really just sideways. Just too many buyers to, get the price. The price cannot fall below 26.7, right? I mean, that's a key inflection point. And then it seems like a local level was like manufactured earlier this month. I don't know, like a week ago. And that's it, sideways, up and down. Still below the 200 moving average on 4 hour, not really that great. And as you can see, really just looking at the daily, nothing happened. Same thing as every other day, right? Just up and down. Really wish it was more eventful than that. I hope it breaks higher. That'd be great, man. It's just you know what Bitcoin would have to do? Market participants, the buyers would have to push the price above the previous discernible highs from April and early May. We're talking about $30,000 to make a higher high, and that's might be insurmountable right now. Momentum is just not on the side of the buyers, even with them defending this level. We got to make some higher highs, higher lows eventually, man. Otherwise, this is just not going to end well. And then that total market cap chart's going to resolve the way it's most probable, which is down. Even though it's improbable it would break upward, it still could. Just saying. Do a sound check. Should be okay. Should be all right. Again, crypto is just gonna do this. It's best looking at the stock market, like traditional markets, because liquidity is just not in crypto right now. Let's go to Ethereum. That marginally better than Bitcoin, right? As it's taken out all its same lows. You're going for the highest daily candle close since May 7th. But still, when demand line or when supply line be tested, right? Then it's like 1900. That'd be cool. You've been uptrending. Maybe it's just downsloping consolidation. More data is presenting itself every day, and maybe this is it. Downsloping price extraction, like falling wedge behavior. But that's it. You're just in the middle of that structure right now. But looking a little stronger than Bitcoin, just a little bit. And then everything else kind of had, just a rally today. BNB up 1%. Yeah, sure, okay. Buyers defending for now, but still no higher than you were a week ago. Snooze fest, man. And just right there's a range. There's top of the range, there's bottom of the range. You're not at either level. Okay. XRP. All right, it's up, man. It's still above. It's still broken out, kind of that of its own supply line. Back tested it yesterday, and a little bit of volatility today. Not really, but okay, cool. Better than BNB. Kind of better than Bitcoin right now. So just another day where it looks like we're staring at like a 5-minute chart, 4-hour chart. Now this is the daily. Each candle represents 24 hours here. It's unbelievable, right? You can't even believe how little movement we get every day for a very long time. All right, let's go to total. Check it out. How we doing? Oh, we safe? Nope, not safe yet. It'd be great to get above 1.1 trillion for real. You're just at it right now. I mean, you don't understand total could rally to 1.13 trillion and you're still in the bear flag. You're still not even close to rivaling that right shoulder. And that is how a pattern becomes invalidated. So that is like, again, insurmountable amounts of bids have to come in for us to invalidate this pretty big structure here. Been a development since March. It's an improvement from yesterday and the day before. Certainly an improvement, but not much has changed. It's still, you could wake up one day and just be down a lot. Below the 200 moving average. Yeah, not making higher highs than you were May 15th. You're still below that. Dang, that's just still not that great. I mean, believe me, when things improve and certain levels are taken out, buyers, give us some higher highs, man, I'll be the first one to tell you like how much better things are like on the chart. But these things haven't happened yet, and they may never happen. And I'm not one to be like it's gonna happen ever. I'm just calling it how it is, and I don't think that's what people want to hear. But they do want to hear it when it means number go up, but this doesn't really imply number go up yet, even though it could go up some more and still be very bearish. Yeah, we could flip the chart. There's your chart. I mean, like, beautiful. Sure, it does look like buyers have been failing and there's been some distribution going on. Maybe we roll over here, but even if it did, a higher low would have to be put in, and that just, it could be put in and then you get classic distribution or accumulation flipped over. So that's what I'm saying, man. Like, even if this accumulation from this low happened and manifested into a rally, that rally would have to rival take out 1.2 trillion. And if it fails, then it's just another lower high. Then all of a sudden, instead of head and shoulders, we all of a sudden get some sort of, just 3 falling peaks eventually, right? You really want that? It's not going to improve the situation much. It's just going to strengthen the argument for bears. So just a lot to be done. Even if it goes higher short term, so much to be done. S&P 500. So, there was a breakout on the 19th. People were, all the bulls were coming out of the woods and saying, you know what, man? See, new bull market, man. Everything's good. Remember the fake out zone? Well, you're back below it. You're back below the fake out from June 3rd of last year, fake out from February of last year, fake out from May 2nd of this year. You're back, below it. So that's another fake out for now. So I wonder, are we just going to pivot tomorrow and rally higher? Well, I mean, you look at the oscillators here, man. I don't know how you could really be ecstatic about things. I mean, daily, someone tell me what happens, any follow through. Here's one high on price, and here's a slightly higher high on price. That's buyer exhaustion. Look, a high. And then the slightly pathetically higher high. And then look, a high. And then look, about the same high, if not a little higher high. Okay, lower levels of RSI. Rejecting 60, rejecting the bullish control zone threshold. And then look, another one, a slightly higher high again. And just another rejection of 60, the bullish control zone. You don't reject 60 when you're super bullish. That's just not what happens in bull markets. It gets broken, and then you start going overbought. You get overbought, and then you come back and you stay overbought. And then if oscillators reset, you go in the 60s, you pivot, and then run again, you get overbought again. You don't not be able to break 60. Was it, right? The technicals were perfect before. And you're talking about an almost year high. Let me know if we're back. Yeah, I don't know. My internet just did something. And we're back, whatever. So it was like no matter what, the technicals at the time were saying number go down next, not up, and it did go down with violence and drama. And then, throughout that time, I mean, you just failure to stay above 60, and here you are again, failure. And then we go to the 3-day, and look, man, this is ridiculous. I mean, it's like liquidity grabs. Feel like I'm taking crazy pills here, but the oscillator's saying you're not taking crazy pills. Look at this. Oh my God, on the 3-day, that little short squeeze to, I think maybe that was the last little push to grab a little bit more liquidity from really dumb retail money. And then look what's happening on this three-day candle. It is just more developed, more matured, triple bearish divergence on the third high. And look, the 3-day 200 simple moving average is being, I mean, for now, there's less than a day left. We'll see what happens tomorrow, but it'll be rejected unless a miracle happens tomorrow. Unless we have to have max bidding to get back above that 200 3-day simple moving average. I have no confidence to believe that would happen based on what this oscillator looks like. Based on, just can't. When's the last time on the 3-day the S&P 500 has been above 60? It was January of last year. Not this year, last year. It's been 17 months since you were in the bullish control zone. And not even close. Yeah, dude. By all means, man, like, go ahead and buy everything in the world, right? Because it's so cool, and the number going to go up. This is screaming now. The end is nigh. The end is nigh. But it doesn't mean it's certain. Just means I think there's a higher probability chance of a flush downward next than more short squeezes. But we'll see, man. We'll see. Debt ceiling. Oh, we reached deal. That's great news, man. We didn't default. We're just going to get more in debt. And if, this guy, remember, the install leader is in charge right now. If he okays it, that's real bad because he probably, I think he got a blank check to further use taxpayer money to destroy society that's been created, been around for 200 plus years. Great. Weaponized taxpayer money. So that's where we are. There's no winning. There's no winning. I guess maybe unless if someone has puts or a short on certain assets in this market that are about to flush that seem probable they'd be flushing, those would be the winners. Or people in cash a little bit and high interest savings accounts. So we can move on. I didn't spend too much time on the S&P 500, but that's a big deal, man. Big deal. Not a joke. That was a major development today based on it looking at the 3-day. You saw that, right? A completely different story from yesterday. And it's like perfect. It makes more sense for the narrative that I've been painting here. And it's not based on opinion. It is based on like straight up charts and data. And let's move to the next one, the Dow Jones Industrial, which I have far more conviction on this one for downside than the S&P, just based on its structure that is so discernible and identifiable. It's in textbooks. It's everywhere. Classic accumulation. This is just one high. Think about all three of these highs is just one time, okay? The first time was in August of last year when the S&P 500 saw 73, right? That was one. This is number two. This is the second failed attempt for market participants to rival or breach the previous highs from last year. Multiple different ones, right? So, and now the issue is, well, look at that. We're starting on 3-day here. You got the hidden bearish divergence. You got the bearish engulfing candle. Now what's happening? You're talking about we're going on 6 days now of the buyers falling below the 200-day simple moving average, 203-day simple moving average. 3 times more significant than just the 200-day simple moving average, or just the 1-day 200-day simple moving average. Look, 6 days of rejection of that very critical moving average as resistance, and look on this, one more rally, just another test, one time, maybe second time, everyone knows. And I mean, it's virtually going to cover the previous candle unless a miracle comes in tomorrow and we just rally like, oh man, you better rally so hard tomorrow. Otherwise, bad stuff, right? 33.222, repeating, of course, Leroy Jenkins. You're below it. You're about to close below it again. There's a lot of downside. If the TA is respected, man, there's so much downside in Dow Jones. I'm excited about it. Not because I know I love the number go down, but man, that's TA. This is what we spend our lives like studying and researching. It playing out validates the thesis, the psychology of the buyers and sellers we've been reading and studying, man. Like, seems way more probable down than up. The negative momentum has just begun to build. You're currently at your highest level since March 30th. And sitting around 48, so just neutral right now. All right. Look at the daily on this too. That's like 3 black crows. I think you've got 3 black crows right there, chat. Skating neutral, getting real close to that bearish control zone. You have not, the Dow Jones Industrial has not been in the bearish control zone since March 17th. Been a while. And what is that, 2 months? Well, you're about to, especially if you stay below this level. Here's the context, right? I mean, it's so bad, dude. The distribution's so real, and it keeps becoming more real because each test, each rally you get is a lower high. And look, the 2 highs here, the shooting star was the real tell and the reversal. But then, like, what? A rally happened. Look at this huge green candle on May 5th. Oh, all the dumb money just, oh, we're safe, everything's good. All it does is fulfill a gap fill, right? It fills the gap from the day before. And then what? Just runs up to test the top of that inflection zone. Three out of the 4 the next days tested that level and rejected it. So it's an up thrust, and then it's a back test of the up thrust, and then another sell off, skating along, chopping around, whatever. Buy orders propped up, and then another rally. But on this rally, it got to the high point May 19th, right? When the index was doing so well, big tech, Apple, all killing it, right? But then look, piercing line reversal. First off, that is a piercing line. I'm sorry, inverse of the piercing line, the dark cloud cover, excuse me. This is a dark cloud cover Japanese candlestick reversal that is now turned into like three black crows. But it's not just that, right? Wow, we got like 3-day argument, daily argument. Then all of a sudden the 4-hour is coming along, and you can see undeniable hidden bearish divergence from a high to the significantly lower high with higher levels of positive momentum. But the wave structure is really concerning here because you just look locally. Look, an X and an A, and then a B. What is a B? The 886. A deep retrace on B is never good. But then when you go with the lower high on C, that is damning. Because if this is real, if you've completed the C wave, and there's an 886 on B, there is only one pattern completion zone. And it is the 1.618 because it is the deep crab. It is not the butterfly. So you have a minimum target of $32,400 here. Deep crab potential isn't confirmed. And the bad action magnet move is right around $33,000. You're very close. So people can just all day, everyone's bearish, whatever. I don't really care what everyone says. You know what I care about? What are the market participants saying? They're saying it with price action, and the price action's terrible. This is like almost an open shut case for a lawyer for a murder charge or something, right? I'm the prosecutor in this situation, right? Yeah, it's true.
I've got information, man. New shit has come to light.
So if you want to present an argument based on traditional technical analysis by the book, by the research that's done by many geniuses over 100 plus years, to debate that. I'd love to see your argument against that. And again, it has to be from the books. All right, classic distribution here. I mean, this is just local stuff, man. This is massive. And then we were talking about at the beginning of the analysis, it's even more massive with this high. People don't think one high. Second high? No, one high. This is all the second high. This is in my opinion, institutions quietly, subtly offloading their position over a long period of time as to not create a panic before eventually they finally offloaded their position, allocated their positions to be favorable for a market meltdown or a big flush. So they're hedged, right? They're protected. Takes time. And that time may be nigh with the third high. All right, so let's go to the NASDAQ here. I know I'm spending some time on this. You get how, like, there's more to talk about on the traditional markets than there is Bitcoin. There just is. Biggest percentage of the Dow Jones is UNH, around 9% weighted, I think. UNH, a healthcare company that is already in a bear trend. Okay, so you gotta sell off today finally after the short squeeze of short squeezes, the most hated rally. You know what happened? A gap fill. You do have a completed gap fill from August 19th of last year. 22% of the time, gap fills can act as resistance points, so it did. And there you go. I mean, if this catches any sort of follow through, you know what would develop. It would be triple bearish divergence. But it hasn't yet, so okay, we'll talk about it when it does. There's no real, I mean, the bearish divergence isn't really that strong on the RSI of an argument. Still in the bullish control zone. So again, this is your best performing index fund of them. So, you know, like looking at if you're looking to short something, right, you're looking for the worst performing assets. But yeah, I get the whole theory of, like, you know, the harder they fall, the higher they go, right? And this asset, I mean, this index fund almost had an 88% retrace, but didn't. I mean, like an 886 is 12,827. You got as high as 12,764. So, you know, there's a lot of work to be done for, you know, the bearish argument to get stronger here, because it's been killing it so much, been doing so well. The IWM that, you know, was trying to double bottom at support, and then, oh my God. The one thing that you really, like, it was looking kind of okay, and then it's like the one thing that couldn't happen that you're trying to tell me that the market participants pushed the asset to virtually test the 200-day simple moving average, and at the penny that happened, a complete close and reversal and sell off for the remainder of the day until this index fund closed at its session lows, and then painted an unbelievable looking shooting star. I mean, this is the worst. Like, how do you do that? I couldn't even have dreamed of this being painted today. You know, like, whatever the candle was going to be, that was what happened. Well, that's really bad looking. And guess what? If you're talking about a range bound asset between 180 and like 170, guess what? No breakout, a fake out, if you will, a fake out. Beautiful, beautiful candle painted. I mean, like, I know it's not what you wanted to see if you wanted a real, like, some follow through off this rally we've been seeing. So just as you think something might be happening, nope, can't get your hopes up, man. Not yet. Don't do it, Larry. Don't FOMO. Don't be the exit liquidity. Still a terrible performer to the other, index funds. Just awful. Okay, so that was it, really. Those are the big four. And then, let's just run it down and look at gold real quick. That's just, trying to hold on to 1963. No real edge or anything. not really performing well. Like the sell-off's not really performing. The reaction that you're receiving at the completion zone of the shark is not really good at all. In fact, look at there's a couple levels from 2020 and early 2021 that are currently attempted to be defended off of severe bearish divergence, and it might not be over. And seriously, this could just be weight, and you'll see lower prices. But I think what would happen on gold, no matter what, is you probably see a higher low than 1800 eventually. It's just, man, you're just up here waiting for the flush, but it hasn't really happened yet. But we know in the monthly it looks spectacular. Same with silver. I mean, it's still really not anything to write home about. There's nothing, like, no trade setup or anything I really see that's like amazing. I mean, maybe if it holds $23, I mean, it is defending that old supply line. Look back from frickin' 2021, 3 touches. You just tested it actually today or yesterday. I mean, it's on a new day now, but you did formally test that level as support for the first time. Actually, it did that April 3rd before rallying higher. So that's good. I mean, like, maybe hidden divergence develops. So again, silver on the monthly looks great. I think you're going way higher eventually on these precious metals, platinum included. Platinum's, still just struggling here. I don't know if it'll hold, because you confirmed a top, and the bid should be coming in if it's a true back test. That's right. I mean, is it really a back test if there's no follow through off the back test? Not really. So you're still just like, is it going to be a formal bullish back test? Well, give me some price action, follow through, and a rally off this level, and then yeah, sure, but not yet, not until then. So it could just be, it could break down from here. But still, either way, as long as a higher low than freaking 909 gets put in the coming weeks, months, then it's just classic accumulation. Then the monthly looks great. So U.S. oil, that still, we know, man, like bullish pin bar was painted, confirmation low was put in, some bullish divergence on the RSI. Understandable, man. We know, like, that bottoms can get put in, double bottoms get put in downtrends, but it doesn't change the trend. You're still in a very bearish trend, and that isn't even threatened at all until market participants and the buyers are able to push the price above $82, $83. I mean, it's still just bearish. But yeah, bottoms get put in and rallies ensue off of those. It's just, you're still below the 200-day moving average, still below a key inflection point, nice line from history. It's cool though. I mean, great, man. I'm not taking anything away from U.S. oil, putting in a second low, and it could be a confirmation low that could turn into a wave up that could take it significantly higher, and if the trend is so bearish, right, it would probably underperform, suck, and then roll over later. Yeah, for now, maybe like a little bit of exhaustion, so maybe a short-term rally ensues off of that. Whatever. Okay. But natural gas, it's been terrible, man. Been real bad. Dang, man, 267. 267. The heck is that? Oh, okay. Major inflection point 2002, 1998. Wow, my God, the 1990 level. So we got in 1992, 1993, 1994. That level was formally back tested as an effing resistance couple days ago, and that's it. Lower high in the previous, not a double bottom. Remember, this is what I'm talking about with U.S. oil. Well, yeah, of course, like, confirmation lows can get put in and then some rallies can ensue off of it, but if the trend's just truly awful, I mean, you're just going to get a bear market rally.
Having in August, but who knows at this point. 0.1938547 LTC.
What's up, Rob? Thanks for the almost American contribution. I don't know, 1775. Wasn't that like maybe when the Constitution was like being drafted?
Hope everyone an amazing month of June. Troy/US Daily, harmonic pattern.
So much chicken. Thanks for 17, dude. We'll look at Troy. Thanks so much, dude. Okay. Kings. All right, so we will. Look, that's just bad, right? 1992. It was the first major, peak and reversal you had ever seen in the history of the natural gas futures chart, way back, many, many years ago. And it was just test as resistance, you're rolling over. I mean, rejecting that like that's an evening star reversal, and you catch it follow through. So that's it. I mean, God, we're going lower. I mean, it could be range bound forever, man. Just dead asset right now. Bubble popped. Who knows how long this like area is gonna be? Your price is gonna be oscillating through it. I mean, you're getting close to. I mean, you're at levels where you have major reversals have happened before, but there are other levels that are lower than where it pivoted initially, where it could go to and bottom out. So it's just. Remember, a lot of these commodities, the bubbles pop. The other ones there are a couple that are still parabolic, like live cattle futures and orange juice futures and feeder futures. They will have the same type of fate.
ACH please. Asian gold soon government license. I hodl a couple millions of this from 2 weeks where strategic stop loss. Viking Kang.
What's up, Solta? Yeah, dude, we'll look at that. Thank you, man. Appreciate it. Sure. All right. I'm just saying, like the ones that are doing well, right? Like orange juice futures, that 7% today, dude. Wow. Jesus chimes because orange juice futures today, traders have settled up at their highest level in human history. You've breached the 1-4-1-4 fib extension. You will not stop orange juice. If you try, you're going to have to go through the orange juice Navy SEAL frogmen. Not going to happen, dude. Orangey McJuicerson, the cult leader of the Orange Juice Marine Force Navy SEALs, will destroy you. Okay? You will not stop him. Yeah, one day this will end terribly, but not today, Larry. You do have a bubonic plague going on in orange juice, orange trees in Florida, so incredible, man. Drink your orange juice with a monocle and a top hat and a cane, and possibly put on a tuxedo. Put on your Rolex C's and all your bling. The rich man's drink. All right, live cattle futures. See, it looks like it might be over for live cattle. I don't know if that gap will ever be recovered. Could be the breakaway gap. We saw this on all the food commodities that ended their cycle. I mean, I'm talking about the whole trend reversed. It's over for them. The gap down was like that, and then sure, attempted rally, but then they could never recapture that gap. And then a drawdown, and then lower highs, lower lows, and then it was done. So, yeah, we want to see these things collapse, man. We want to see them dump. Okay, we don't want to eat the bugs. Soybeans again, man. Dump it. Dump it to the earth where it belongs, because it's soybeans and scrum from the ground. Get it? So, recover yesterday. Nice engulfing candle. Doesn't matter. The trend's over, dude. Does the rising wedge and lower highs, is that not enough for you? And the formal bearish back test of key ice lines from history, rejecting them. Oh, it's a formal confirmation. Everyone knows now, and then they draw down further, and then you're just at the next one, and just after a significant decrease in percentage points of value, it's just at the next level, and this is where green candles, limit orders set up, no one cares, chops around. Eventually, it's going to break, and you think $1,200 after that. Remember, this was like a major trend that is now over. It is reversed, in my opinion, and I think like 1185 is the big one too. Once that breaks, you can imagine X, A, B, C, D. You'll have some major shark pattern one day down the line around 9:30. This whole thing will go back to where it was before. Yeah, so kind of looks like Banks, doesn't it? Excuse me. Wheat was up though. Wheat kind of had a good rally today, but unfortunately, dude, like wheat futures, you're below the level of levels. You just are. 637. Who cares? I don't give a crap if it's up 2.6% today. Go test it as resistance for the first time and then roll over later. Okay. This thing's got a lot lower to go. You just give it time, man. Give it time. Trend is your friend and it's bearish. Corn futures was up today too, but I have no concern about that. I mean, good God, broke the downsloping demand line. I think 522, 441. I think eventually you'll find your home at 441. Remember what we talked about with live cattle futures having that gap down. Hog futures had it too. Recovery that never was, and the participants, the buyers were never able to push the price to go fill that gap. And that's, again, it's kind of indicative of breakaway gap behavior. Traditional markets have those. And another gap. This one could fill 626, but not if things are real bad. Okay, so I just wanted to look at some of these commodities, man. We go across the markets here. You know, across the markets, man. You look at the bond yields. US 1 year today saw its highest close since March 9th, 5.084%. Look at the pivot point off the 200-day something moving average. You're not stopping this, man. You're not stopping it, dude. What are you thinking? How do we get to the? How do we do the 3 month? Okay, look at this one though. This is the 3 month bond. Am I crazy here? No, which one is it? Was it the US 1 month maybe? That's the bonds, the yields. Yeah. No, there was what hit. I think like a mortgage rate, average mortgage rates, right, for these institutions, right, they're giving out loans like 7% today. Look at this, 5.617% for 1 month bonds. I don't know, just oscillating since the big markup May 9th, and the clearly all-time highs. It's crazy. Crazy stuff, man. I think Chinese bonds crashed today. You know, bonds dumping, big leading indicator for equity markets if it actually, the drawdown actually begins. So, okay, so really going across the markets, looking at that. So what happened, man? You know, things were doing stuff, right? Let's look at Apple, largest stock in the world, market cap. And it's just something incredible, man. I mean, I want this to be the top based on how perfect it is, okay? So I can't even remember if I discussed this with y'all yesterday. I think I did. It's plotted. I know patrons, Citadel members, you were pinged on this. And like one of the members, he like went short on Apple at this 886. At it. Like, look, the all-time high, undeniable, December 31st, 2021. Then the absolute lowest low in the entire, downtrend you've been in, January 3rd, 2023. You anchor that, it was a perfect, ungodly test. And that was it. I mean, the buyers, they gapped the price up. Like, so it opened Friday at the 886, and then there was not even a dollar bought, one share of Apple bought above that 886 before the drawdown, and then the gap filled and you closed right where the price opened the day before on Thursday, and then a gap down, and then another gap down today. Lowest daily candle close on Apple, in fact, since May 4th. It doesn't seem that significant, right? But I mean, that's a few weeks, right? I mean, that's a couple weeks anyway, lower than all these levels. And guess what? If you regard this wedge at all, right, the way it's been plotted, you've broken down. You have this is the fake out, false bullish breakout, the little whipsaw, and guess what, chat? somehow, some way, even, is that more to, how do you do that, man? Bearish divergence, man. You keep going higher and you keep making lower levels in the oscillators. That is buyer exhaustion to the 10,000th degree at this point. It's like, I feel like I'm going crazy. I'm going crazy. I'm going crazy. This is the area where massive major reactions happen, and it's not happening. Whew. Days like this make me feel a little bit better. As I was saying yesterday, when it seems like I'm getting a little bit unhinged, kind of losing it, that's when you know we're getting real close. Well, based on history, we're getting close. So Apple, major development today. They got sued too, right? No, I'm not. They didn't get sued. Sorry. Apple, they had struck a multi-billion-dollar supply deal with Broadcom today. So I mean, obviously, wasn't really good for the price. Well, yeah, I mean, that was a catalyst that fell on deaf ears.
Mitch, what do you think about how BABA is playing out?
It was bad today. AI, very bad stuff. Invalidated bullish Venom Baby, and pretty bad close and sell off, and you fell and closed the day below the key inflection point from year like 2016 or whatever, 2014. An ice line that was really strategic, and that was kind of the argument for being long. And when you're below that level, the argument for being long is not really there. You have to be above that level to really want to own BABA. We can AI, normally it's like $15 requests and stuff, man. But I'm just telling you, I'm literally giving you the insight, or telling you what, because I was looking at it today, and it's just like, dang, man, you can't really catch the bids when market drivers. And this is what I'm talking about. It's like if you're bullish on anything, remember, this market is being driven by like 5 stocks, and we're looking at the highest weighted stock, right? The one that, if it did flush, it would have the largest effect on all the index funds, which in turn would have the biggest effect on all stocks that you like right now. And it's there. It's at the crazy levels. The tip top, your hand's about to get cut off by the blade in the Willy Wonka's chocolate factory, the fizzy lifting drinks. That's where we are, man. Start burping. Well, the burping started today. Good God. Okay. It's just not that. If this flush, terrible for BABA. Alibaba's going to get destroyed. Everything will. Google will get wrecked. All of it will. And the good news is, right, if Apple flushes soon, based on kind of all this extended divergence, 886s everywhere, well, that means that the assets that were performing pretty miserably, they're going to perform like crazy to the downside. Like, so Apple's going to have a bad day. It'll be down 1-2%. And then you'll have some assets that'll be down 5, 6, 8, 10%. Wait a second. That already happened on something that was amazing. It was a trade setup. Shopify down 6% today. After doing what? It's gorgeous, man, right? Fell below 59.52. That's a major inflection point. I don't think there's really anything there till $51. There could be a lot more downside. There's nothing there. I'm talking about one peak from February 2020, and then one valley from March 2022. That's it. That's the target from here until you get back above 59.52. But you understand why they're take profits, right? You understand what measure moves are. They're just guiding tools for reasonable take profit, 3-to-1 reward risk stuff, and it's like these levels get achieved, and then guess what happens? Traders and buyers, investors, they take profit, and then price can stay up there, can up thrust through it, and eventually you roll over. You wonder if that is that is a lot of volume. It could still be a breakaway gap, but not if Apple flushes for real. So just know what happened. No support. There's still, down 6% today. There's still another, wow, you won't even believe it. There's still 12% downside until there's any formal real support resistance from history. Big ones, Yeah, there was no bearish divergence or anything like that. There doesn't always have to be buyer exhaustion before reversals. People don't understand. It doesn't have to have that. Wait, was that it, man? No, dude. Look, I tweeted this today. Oh, this is like just one of my favorites. I don't know, I love it. Technically, that's it. Technically love it because it's doing all the good stuff, man. It's the beautiful bear market rally, all right? You know, you crashed last year, you had a major drawdown, the big sign of weakness, and then what? For an entire year, let's say 11 months, bear market rally. This is your attempted rally on the weekly. You can see it. And guess what? So weak. Yeah. Well, it just depends, right? Because someone could have, you know, if we plot the candle like closes, opens, and the wicks, you tested that high from November 2021, that zone, right? You tested it and no higher. And what I'll do is I'll do this zone here, right? Because this is how I do it, man. I'll do the wicks and the candle open closes. Most times it's always candle closes, but rarely, sometimes, like in this situation, I'll do like a candle open right there. That's it. So a formal bearish back test of a key inflection point is resistance again. And then you sell off, then you make a lower high, then you flush again, and then you fall back into the rising wedge, and then you bounce off the 200-day moving average, you bounce off the demand line of the rising wedge, and then what? What do? You formally back test the upthrust. You reconfirm the absolute validity of this rising wedge pattern. And then to add insult to injury to buyers, a gorgeous shooting star candles painted, and prices never get above that level again. And then now today flushing lowest daily candle close on Hilton worldwide since March 30th, soon approaching the demand line of the rising wedge again. And we're getting a lot closer to this apex of the rising wedge. So, and I think, look, man, what is uncharacteristic of this little rally we've been having for a year? Guess what? You weren't making lower lows or lower highs, excuse me. You were only making higher highs. Now, something's changed. Market participants are now offloading their positions. There are less market participants involved with this asset than before. This is all context of the attempted rally. We knew it because the all-time high was a year ago. So pay attention, because 115 seems like the area where this would be headed, okay? Measure move of the rising wedge from the beginning to the, bottom to top of the pattern, from the breakdown, if it ever came to be. I don't know when it would happen. 100% measure move would be $106, which would take you below a very key inflection point that you need to be above. That could take, there's gap fills at like $92. So remember, this is not a joke, dude. This is like, think about retraces from the COVID crash low to the high, Larry. Guess what an 88% retrace is? $58. Even a 786 is $70. These are the levels. Just think about it with your mind, the wave structure that's already in development here. You just completed the C point, the lower high on C, 50% retrace on B. Once you break B, then it's the 886, then it's a massive bat pattern. Good education on this one, man. If you're enjoying the live stream, hit the like button below. So thanks for being here. Oh my God, wow, holy crap. We got 15 seconds till your daily candle close, so let's go to Bitcoin. Look on the 8 side in the chat. What the heck? I somehow removed Bitcoin from my watch list. Yikes. Didn't mean to do that. Oh my God, the Nikkei. So you know, understand something else happened, all right? Let's get some Jesus chimes for the new day. New candle has been born. The old candle closed. Holy crap, man, we did it. Wow, nothing changed. Range bound, sideways. Welcome to crypto. Wow. Amen. That was it. Highest daily candle close on Bitcoin since May 17th. as you can see, let's just run to this real quick. Wow, it gapped down on the open. So I think it was the open. Yeah, you just Japanese stock market just opened, and wow, look at that. That is a. Let's see what happens here, because I was looking at this yesterday. That's a dark cloud cover and all-time highs. Yesterday, the Nikkei hit all-time highs. Insane, right? Just crazy stuff, man. Remember, Japan's bringing PlayStations, unfilled gaps. There are unlimited ones. There's an unfilled gap for each one of you watching this stream. Take your pick of the gaps. But, you know, I mean, do we get a fib extension? We get a one. I don't think we even got a 1272, man. You could be working on a massive fake out. Like, you're still in this, I don't really know if it's a breakout or not, man. Like, of course, you're above the level. No one's taking that away. But it's never about the breakout itself. It is about the follow through. And how could there be any follow through on the Nikkei after this type of price action? That's like exhaustion wave, man. Oh, just going up 13.65% in 46 days on an index fund for Japan. All right, their market. I do not trust that at all. This is the highest risk area for fresh long. You're out of your mind. I hope it keeps going, man. But the all-time highs, or I think it was. Why do I have 33.2 up here? Am I crazy? Oh my God, it's not all-time highs. It wasn't all-time highs, but there's certainly no resistance here till 33,000. Yeah, the all-time, I don't know what I was thinking. The all-time highs, I think it's in a different denomination. It is all-time highs, just not the US dollar. 38,965 in 1989 was that level. So excuse me on that. So what do you think? I mean, are we after just a wave like that, a straight line up with unfilled gaps, just barely above the breakout point? Is it a real breakout? I don't think so yet. There's no follow through. So let's see. I had my alert set up, I thought, just slightly below that level, because if you hear the beep, you're failing. It's a failed breakout when you hear the beep below 30,700. Yeah, Nintendo released a new Zelda game. My God, the commercial for it. I saw the ad for it. It made me want to vomit. Go watch that new Zelda game's music, like the music that was playing, and I'm like, I had to mute it. It was awful. And then the gameplay, I don't really like this whole cartoony looking stuff. You know, if Zelda came out with like an Unreal Engine, like crazy graphics, I'd freaking buy a Nintendo, whatever the Nintendo is, to play it. I'd do it, man. But they just keep coming out. It's all like, and I get it, man. The demographic's not for adults, it's for children and kids. But Nintendo 64, like the Zelda 64 game and Majora's Mask, that was more like it was trying to be more realistic. It wasn't just doing this weird. We're in 2023 and they're trying to make the graphics worse with this 2D, 3D crappy graphics. It's like a theme, garbage theme. Go back to amazing, like realism. I hear that people say the new Zelda game's dope, but it's not because of the graphics or the music. It's because of the system, right? The system of gameplay. It's kind of like they do Fable, where you can make different choices and so many ways to, skill trees and all that. I heard about that, but anyway, is that all you got to say about the Nikkei chat? Really, just talking about a Zelda game. So I don't look at the chat anymore, dude. It's like whatever. Oh my God. Okay, Nikkei doing stuff. So we'll say, if not all-time high, it's virtually it is. Like, a lot of you weren't alive when the Nikkei was at this price. Yeah. Some of us were barely alive. I was barely alive. 2 years. I was 2 years old last time Nikkei saw these prices. This is insane, dude. Okay. Let's go back to total. So again, man, just to reiterate here, no change in terms of like the big picture. And that even if it rallied, it's like one worse thing. Right now, it's like everything's against you still. It's bad. It's scary bad. You breaking above 1.103 trillion, okay, it's still really bad, but at least you're above a key ice line. That's good. that could manifest into a rally that's a little bit more significant that could maybe take you to the top of this bear flag, right? Maybe the 200 moving average on the 4 hour. You could do that, but until you're above that, there's just no arguing. There's just nothing to argue about. It's just all bad until these little things happen that are bullish, and there's just nothing implying it yet. Okay, I am not trying to repeat myself here. I don't want people to get like false senses of security because of yesterday's rally. It was cool, man. I was pinging people like price action. What do you want? You know, like it was a certain night and like Bitcoin was going up and it was up like 3% at one time. And it's like, okay, man, we're paying attention to it. I see that. But in the grand scheme of things, not even able to break a local high with a candle close from May 15th on the 4 hour. It's cool though. Like I love it. Nice. Let's pivot here and let's break it and let's run to 27.8 and then 28.8. I hope it happens, man. I'm saying you haven't done that and you haven't broken really much anything. Let's look at the DXY. Remember, it was trying to double bottom. I mean, the double bottom's here. It's like still pretty strong, pretty good looking. Hasn't rolled over yet like natural gas did after it put its second bottom in. So it's there. What happened? Let's see. Did we get it yet? Very close. Nah, you didn't take out that high from May 18th. Yeah, interesting, right? How you have the DXY rallying with the equities market. That's not really common. It's normally they're inverse correlated a lot of times. So looking left, I mean, you'd think that a target of like 104.85 maybe. I mean, you're above 102.24. I think that's a big. Oh, okay. See, the problem with the DXY, it has so much data going back to like the 70s on the chart that there are peaks everywhere. There's a peak just above you at 103.82. It's that high from January 2017. So that could act as resistance. But if that's the case, then there's a little bit more upside on DXY. You break that, then you're testing the heart line of this massive channel that goes back to 2009 again. But still, I mean, that's a great looking bottom for now after a 50% retrace. But remember, you are, this mega channel and you're just in the dead middle of it right now. So here's your DXY. Dude, the corn trader. Paying bills short in corn. No, corn was a leading indicator that our farmer bro was going to pass away, unfortunately, All the commodities. I mean, once poor dude, like our farmer friend, Mr. Brandt, once he saw the cycle, when the cycle ended for the food commodities, he was like, my soul is released. I can finally die in peace. So he got to see it, man. He got to see an insane FOMO run all the way up, man, to all-time high. Wheat futures hit all-time highs for one day. It opened at all-time highs, and that was it, and it was over. So we can be grateful for that, It ain't much, but it was Mr. Farmer and his Lambo with his gold chains and his mansion on the farm. It was. All honest work, though, that's for sure. But moral of the story, it ain't much, but it's honest work until you keep working, and then all of a sudden, right?
And then, just like that,
it is a lot. Okay, so Las Vegas Sands, glorious, absolutely beautiful. I mean, dude, I look at a lot of charts, man, and I post these charts, and sometimes there's no reason when I'm looking at them to post anything, but this one had a perfect bearish sharp pattern. It was completed. There was bearish divergence, and it was at the 886. That was it. And so it's starting to flush. What a major reaction occurring, down 6.35% today. There's no support till $53. So a little bit more downside on Las Vegas Sands. And guess what? Unfortunately, another lower high. Here's your problems, man. You got problems. The trend reversed, and we didn't know at the time, in 2018. And then the Bearish-Gartley comes into play, and the coronavirus, and then the 786 completion of the Bearish-Gartley, and the crash, and then the rally. Lower high than the previous high, then itself, a lower low than the previous low, then all of a sudden a lower high than the previous high. Bear trends. Bearish trends. I mean, it's unfortunate, man, right? What would happen if the trend continued? You'd be making lower lows than the previous lows. Now, hopefully, I mean, like, you got some major inflection points here, so you better be praying for the buyers to defend. But again, we're talking about, like, all the market drivers are hitting these crazy levels, these 886s, and it's a very weak breath of the market. Okay, so I'm just saying, like, stuff, man, like UHS. It was beautiful, man. This has been identified. Type 2 return of the bear sharp pattern, only lower highs where it topped out in 2021. Lower high, lower low, lower highs. Well, hidden bearish divergence could be a lower low coming eventually. We have this range bound for sure, but please understand there's classic distribution. 1 high, 2 highs, 3 highs. This is a 3 falling peaks on significant time scales. You go to the weekly here. You can identify them. This equals 1 high. Okay, so we're just plotting it like this. One, 2, and then 3. Oh my God, man. Hidden bearish divergence on the third peak, the Wombo combo. Guess what's happening this week? Falling back below the 200-week moving average. Look, man. 2015, it was a high. It was the top. And you're trying to tell me what just happened on the third peak locally-ish, right? And then not local, man, back 2 years ago. Confirmation high with a weekly dark cloud cover at that 2015 peak. You're trying to tell me this may not manifest into something really bad, really bearish? I don't know what to tell you, man. That's like legit the dream, right? What do I talk about? Always looking to identify bearish Japanese or bullish Japanese candlesticks at key inflection points from history. It's staring you in the effing face, and it is real. Buyers opened the price slightly higher. You can barely tell, but it's there. They opened the price slightly higher than the previous close. And then look, pierce through 50% and then follow through. 3 black crows virtually. Now, you got a 4th one coming in. That's real, dude. And guess what? I mean, come on, man. What was that? On the second high, the high, then the lower high. Bearish divergence. Playing out. Okay, so I mean, healthcare, universal health services, doing some extremely good stuff if you care about what we do here. That's incredible. If you flip the chart over, I would say the same effing things, but bullish side. I'd be like, sweet mother of God. A piercing line reversal with bullish divergence on the weekly, all happening at the key of key ice lines from 2015. I'd be, and on confirmation, I'd be so bullish on this graph. Trade setup, bullish trade setup. We're going to moon, man. The buyers have almost, the composite operator at this point looks like he has almost completed his campaign of buying before the major markup. That's what it looks like to me on UHS if we flip the chart over. But unfortunately, it's reality. It's not unfortunate because for us, it doesn't matter which way. I am equally as ecstatic about the bearish edge as I am the bullish edge. It's just unfortunately the free market and retail only cares about the bullish edge, not the bearish edge. No one gives a crap about the bearish edge collectively. So it's kind of like, hey, I'm talking to myself in these market conditions. It sucks. And they killed liquidity in crypto, which really killed retail. My God. There it is, Larry. You can't make this up. This is beautiful. Anyway, so it was just one of your losers today. I think he had 10 of 11 sectors today of the S&P 500 were all negative. Who's almost the inverse of Google? All right, let's look at Target, right? Because Target in the news today. Very, very bad, technically. This is not mentioning what they're doing. They are... It's kind of insane that they would do this, but it kind of makes sense, I guess. Show me the charts, I'll show you the news. The charts implying, well, you're probably about to go to $90 in the next 3 to 5 months. $90 target on Target. And then all of a sudden, hey man, it's going sideways. And then the CEO defends, I'm just saying, they're defending, LGBTQ trans agenda propaganda for precocious toddlers, 3-year-old children.
Can you check SPHB? Thanks.
He defended it, and so that turned into the lowest daily candle close on Target of the year of 2023. So, we're 5 months and 23 days into the year, and it was the lowest. Just happened to be the same day that he announced the defense of that weird stuff. Remember, there's a population out there of people that don't want this stuff. There's 0.02% of the population that does maybe want it, and we don't even really know if they truly want it on toddler. It's just the dumbest stuff ever. So easily 138 in time, but $90 target. I'm saying it, $90 target on Target, and that will take us right back to the entry of one of the most legendary trade setups that happened after the COVID crash, or during the COVID crash, at the height of the fear, the bullish back test of this level as support, triple divergence, everything you dream of. The cake baking video, this was the example, and it's all over, right? This was Goodfellas when they're torching trucks. It's the 60s. They're making deals and all that stuff, and now we're eating egg noodles and ketchup. Okay, it's all over. Sorry, Joe Pesci's dead, dude. It's all political. It's like, who's paying them to promote this stuff? It's crazy. This whole ESG thing. It is like it's a way to circumvent our laws to somehow control and push agendas and propaganda. It makes it to where companies don't have to be they don't have to abide by fiduciary responsibility anymore. It's insane. It's a form of neo-communism, straight up, straight from Klaus Schwab. They created these people. They were not born and raised into this American thing, this American culture, where they cherish and thank and praise the founding fathers, freedom of speech, the right to bear arms. They in the Bill of Rights given to us by God, predating the government. They weren't born into this. They were born into his dad was a Nazi. Klaus Schwab's dad was a Nazi. What do you think he was born into? How's this guy the one calling shots at the World Economic Forum? Freaking daddy was a Nazi. All from Germany and whatever. It's crazy. So that's where we are. Why would you ever want someone creating policy globally and having anything to do with the Western world? It's insane. So good luck, Target, man. We're hoping for $90. That's the target. Corporate Equality Index was, created by the ESG. Yep. That's what it is. CEI. Garbage. Communism. It's like sneaky it's neo-communism, dude. It's wild, right? Isn't it crazy? Hey, man, don't talk about politics, man. No one's saying that in here. I'm just saying, think about, they're coming after our world. They're coming after, I'm a market participant of 13 years, man. People have been market participants way longer than me too, and not as long as me. They're coming for all of us, man. It's we're not gonna talk about it till they start coming into our world. Infiltrating all the HR departments and all the executive boards of these companies Yeah, it is our business. Then we are going to talk about it at that point. You're going to shut up. If you don't like it, go watch someone else. I'm sure there are plenty of people that agree with the CEI and neo-communism that are traitors. Oh, wait, no, they don't exist. They're not real. They hate us. People with that ideology hate people like us. We are free, right? We have economic freedom, right? We don't have people we answer to.
Pepe.
We are our own bosses. They don't want that, man. They want everyone dependent on them. What's up, Charles? Okay, let's get these requests. We had a few. Sorry, I'm trying to leave y'all waiting. There's just a lot. See, traditional markets, there's stuff to talk about. I can't spend any time on crypto. It's like scratching chalkboard. Like no developments besides this is the development. You're staring at it right now. Want any more of this? Apparently people do. Apparently Mr. Chicken does. And Rob wants Litecoin. Well, Litecoin, again, one of the best looking of all of them, and it's not even saying that much, just being real. Hold on, I changed the song. You don't want this song for the analysis. Oh my God. All right, Litecoin. Why is Litecoin technically? And I'm not talking about, I don't give a crap about, Charlie Lee and the project. I don't care. But I'm just talking about technically why I would say it's kind of like one of the best technical arguments, right? It's just the trend, the higher highs, higher lows, and it's the sell wall, and now it's the higher low getting put in, and it's the defense of the 200-day moving average, and it's also the defense of $84 buyers, getting the price back above a major inflection point from 2020, just for the crash. That's just a big level where there's just not much liquidity, not much on the order book until 105, 110 again. And so, that's it, right? Most things don't, like almost everything does not look like this in crypto. I mean, for real, for the amount of scanning I do, and you know, again, I put a lot more focus in commodities, and I've really shifted a lot into more traditional stocks because they're just hitting the space bar, looking at these S coins. It's just for a couple months now. It's legit been a joke. There's just been no point, no need. They look awful. Once they started taking out lows, and I guess we could look at those too, but you're in the dead middle of this consolidation structure that's massive. My God, they probably discernible on 3-day and the weekly. And it just looks like it could be, right? You're not quite out of the woods yet. I'd like to see some strength test of 103, 102 again, and then a pullback and a higher low, and then so much demand that the sellers are unable to push the price back to the demand line. That would show me a real good sign of strength. You don't have that yet, so it's still in the development, and it could crap the bed too, right? If Bitcoin dumped, if this whole total thing played out, it's not going anywhere but down. You hear me? It would be going down. But for now, as it stands currently, it's better than everything else. There's your Litecoin. Remember, Charlie Lee sold his coins a long time ago. What was the next one? It was Troy. This is what I'm talking about. This is just like another example of complete trash. I get it, man. I understand. You can see the levels. I have had this chart plotted. It is at a key inflection point from history. November 2020, January 2021, May of 2022, November, December 2022. And here we are again. Here we are again. Why are we here again? Like, look, man. You're at a level where one could certainly size up an entry, a stop loss, and take profits. Yes. But remember, it is Troy. Remember the way total looks. Remember just earlier when I'm looking at the Dow Jones, looking at the S&P 500, what it's doing. When you're looking at those things, it's you don't always have to take long entries on S-Coin Beanie Babies. that are named after, you know, old ancient Greek cities, whatever, you know. But it's here, right? I'm not going to say it's not. This is the entry area. The stop loss area is going to be somewhere right around 2230, which is 2.2 tenths of 1 penny. And then the target's going to probably be way higher. I mean, like, you think about where you could take profit if it just does the same thing. But it's your money. You're at the support. If you want to put your money in this, by all means. Is there liquidity enough for bids to come in again? Look, I'm not saying I know where it's going. Do you understand? I don't act like I know where anything's going. And I can just use the technicals, but I'm just saying we're back at this support again after the run. The hey, 1 time, 2 times, we did it. And then the traders, right, they pushed the price up and they took their profit and exited. And that's 1 time, 2 times, 3 failures to rival the previous high. Remember that? Because that's the context here. 3 failed attempts to change the trend. And here we are right back at this same level. Below the 200-day moving average. The 200-day moving average is still down sloping. Total looks terrible. Even if it rallies, it still looks terrible. That's your call, man. But like, you're requesting it because you've invested in yourself and you get the whole premise of buy low, sell high, buy at support. Because when you're buying at support, it's very easy to strategize where to exit because you know the trade is no longer good. It's very simple. So I'm just planning out for you. I mean, this would be it, right? I mean, hey man, there it is. Just doesn't mean this time it's going to play out. This time is where it could very well collapse and fall down to finally go where it was in March 2020. I don't think Troy's done anything since March 2020 to make it be worth more than that price. Prove it to me, man, with math. Price to earnings, price to set. Oh, wait, you can't because it's Troy. It's a Beanie Baby. So if you want to long a Beanie Baby in these miserable market conditions, with the index funds possibly ending their bear market rally and a lot of individual assets ending their bear market rallies, by all means, man, I hope it plays out. And I'm not saying it's going to dump. I'm just saying good luck. If you want to put your finite money into something like this, instead of looking for something on the stock market that's traditional, a traditional asset, not a Beanie Baby. And guess what? There are Beanie Babies in the stock market. They don't make any money, and I wouldn't put my money in a Beanie Baby. The only thing I'd be doing is shorting a Beanie Baby in these market conditions at resistance with a bearish edge in a well-defined long-term downtrend. Thank you again, Mr. Chicken and Rob. Sultan wants ACH, the Asian gold. What? Asian gold soon. What? I'm trying to find this. Can you help me? Because I don't think ACH. I mean, because there's a crypto. You know, that's Avalanche, right? There is Achieve Life Sciences, Acadia Healthcare, Asian gold. I don't see that. Sir, could you say something in the chat, please? Let me know what you mean. Because there's like aluminum even too. Aluminum of China. Where's the gold? Oh, wait, nope. That's aluminum. There's a lot of aluminum here, just no gold. ACA. Oh, God, you want the crypto. Okay, all right. Okay. On Bybit. He wants to Bybit. Okay. Perpetual contract, I guess. No, that's... See, there's another one. I think that one's the only one. Okay. We'll look at it. Sir, is this what you wanted, Solta? Let me know. Let me know. yeah, I mean, it's pretty cool that there's a level here. Candle high close. It goes all the way back to May of last year, 1 year ago. And then a nice test in July of last year. And, pretty much the sellers pushed the price around that level, not quite to it. And then a rally ensued and confirmation and distribution, right? The buying climax, then the confirmation that the top's in, and then the big sell-off. And a really nice hammer. Man, that's a beautiful textbook bullish hammer at a key inflection point, right? Either that or the engulfing candle, both at that level. That's pretty cool. And look at the price action you got. You got a bullish engulfing candle on the 22nd. And that's it. If this is real, you might get a local back test of that, right? I mean, I've seen so many times you'll get something like this before it went higher. But you'd probably be looking for a lower high in the previous highs because they've set the stage now. Top got put in, and then the confirmation that the top's in. So off a reaction like that, I get it one low, the second low, but man, always like looking for that, like the wave structures, like the X is the big wave, and then the X to A, or then the X to A to B. Right, you'd be there, and then you're looking at the B to C wave. You always want one wave down, and then some sort of like confirmation there. But you can clearly see there's just very little resistance, until like way higher, like 3.9 cents. I mean, it's up there, straight up and down and up and down. Okay, so then it could go up again. Fine, you could go back test that as resistance. See any edge? No edge. See, that's the problem. Like, you don't have an edge here either. You got a reaction here, and there was no test the first time, only the second time for real. So again, man, it's ACH, it's crypto, and I'm sure somehow people are out there on lesser than coins like this. Some are making some money. Man, you were underground trading, dude, and the most illiquid market conditions since 2018 after the bubble pop, man. And I'm talking the bubble had popped for months. That's where you are in liquidity on this market. So, and if you don't remember that, those were terrible market conditions to trade in. Again, this is, you got to be able to, you got to be a chameleon as the trader, as the technical analyst. You must, or the octopus. I would prefer the octopus, right? Because the chameleon has a different way of changing its color than the octopus. The octopus changes its colors within the blink of an eye because it has, so the octopus is crazy. Its brain is part of its skin. It has half its neurons are all across its body. And the chameleon, right, it has to change hormonally. So that takes about 5 minutes, 2 to 5 minutes to change colors. So, yeah, I would be the octopus or the chameleon, whatever, and be able to go from understanding how bad the market conditions have become in crypto based on the new data, the information we've been talking about with Gary Gensler, SEC, and maybe shifting and looking at traditional markets and applying the same stuff you apply here to over there. I know it's not as sexy, but hey, man, the good news for me is like I was born in traditional markets, so it's really easy for me. But I get it. So many people, even in this community, they were born into crypto, and they never even cared about traditional markets. But you should. That's where all this this stuff has been studied and researched in those markets, not crypto. We just took the everything that was taught there and learned there and brought it to an untraditional market, and for the most part it works out pretty well, barring liquidity being good, like not being good enough. It's got to be liquidity. Pin Discord, like it even matter anymore, dude. Whatever. Been pinning this Discord every day. No one then, whatever. Here's the Discord link. Prove me right. Show me who's gonna join the Discord. Let's see. Let's see it, dude. I'll go to the next request if there was one. Can't remember. Baba. Yeah, AI. Well, let's go to the one, you know, AI asked for about Baba, but it was just 10. So let's go to SPHB for Scabble. Because that was actually, you know, formal. We'll look at Baba, though. Oh boy. Oh my god. Very, very bad. Boy, you think it's okay. I know, right? You think it's okay. The Invesco S&P 500 High Beta ETF. You think it's okay because confirmation low, out of support, and bullish divergence. But then a rally happened. And there was no breakout. In fact, all there was a deep retrace and just another lower high getting put in, and you are very, very close to some form of Class C hidden bearish divergence. You cannot consider this any type of breakout until 6950 is breached. That's the fake out level. It's the same one like on the S&P and NASDAQ, right? Had its own.
Can you look at your roost?
So Golden Knight, sure, we'll look at it. Okay, thank you, man. Scabble Gabble, yeah, I get you, man. You kind of are there. Could be better, but because you could have gotten a test there, but the closer you are to 6950, the lower the risk is for the entry for that short, and the easier it is to strategize a stop loss just somewhere slightly above $70. Oh, but mother of God, dude. I mean, it's still above the 200-day moving average, so it's better than some. But dude, this is a very, very bearish structure. It is what Hex looked like before Hex dropped 60%. I don't think this was going to do that, but you got to know that an attempted rally occurred in the midst of still occurring from the all-time high. And that's it. That's all it is. So until you break 6950, no breakout, and only bearish. I mean, you need more performance. If this is like, if the trend's really reversed and we're continuing this uptrend and things are going to go real well, this real divergence out of support should perform really well. So it's maybe not done. I mean, maybe you just had a bad day today and then we just moon tomorrow, gap up, moon. Okay, the deal gets struck and then we just start pumping and this positive momentum starts building. All right, once you break $69.50, $70, all right, man, we're probably going for an 886 up here, a gap fill at 74.20. All right, sure. But until that happens, right, until all those things I said happen, you can't be bullish. No, you cannot be bullish yet. That's the thing. This was like these markets, man, like they're getting to as close as possible to flipping. And when you're getting that close in price to flipping and possibly an argument for a trend reversal starts occurring, that's exactly when people start capitulating and they start going bullish. And that's right about the time when they start buying, and that's right about the time that the institutions and big smart money start seeing there's enough liquidity that they needed to offload their position to those retail and dumb money, and they can massively sell. They can continue offloading their position, and that's what those 886 retraces are for. Remember, I'm not acting like I know where this asset's going next, but it has not done the things that need to be done in order for you to say we're good for much higher prices. Not yet. In fact, it could be confirming a top locally and target like $60 and $56, and then eventually this all resolves bearishly. Whoa, dude, $46. Okay, anyway. Let's get a Pepe coin. Pepe for Charizard. But dude, it's Pepe, man. Pepe was gonna save the world. What happened, dude? Oh man. Yeah, it was like kind of like, is that an inverse head and shoulders? Nah, no inverse head. This is looks like it kind of looks like to me bad.
Happy Taco Tuesday to all. Always take the time to crisp your own shells. You are worth it. Clank Goulden.
Andrew, 2 thanks for the 5 super chat. Also, to add to that, if you're gonna crisp your own shells, buy your own cilantro, man. Fresh cilantro in the store, and cut it up and put it as much as you want on your tacos or any sort of, Latin American dish. You do that for anything. I love cilantro. I could eat it on anything, man. But dude, just to do it, it's so easy. And man, you know how much flavor enhancement cilantro gives to things. I recommend that. That is definitely food advice. So Pepe Coin here, what? Let's look here and listen. It's the look here and listen moment brought to you by you, the viewer.
Look here. Look, listen.
So Pepe Coin market participants. Market participants, by the way. We're going to really call them that. Market degens push the price to test the inflection point from May 1st, 23 days ago. And they've now formally back tested it as resistance, and that's it. Bearish. Not good. Someone will be like, that's a double bottom. I'm sorry. Yeah, maybe bullish and golden candle. Until you break that level, get wrecked, dude. And even when you break that level, you could still go get wrecked, because if you don't make a price higher than 1.9 million whatevers, and it's just so useless, man. It's like 1/10,000th of a penny or something dumb. Until you break that, you're still just making a lower high. So I think you cannot want to own Pepe Coin below this level. You're out. You want nothing to do with it. Now, if the degens are to push the price higher than that level, we should talk, because it's breaking out. It's breaking a key level. But then more work has to be done, or these degens have to push the price to make a higher high locally than their high from May 20th. And then if they do that, then you're probably looking at 2/10,000ths of a penny or whatever it is, the next high for May 13th. So only bearish below this level. That's all I can say to you. Pretty simple. Let's go the euro, and then we'll go to BABA after that. But it's the euro, man. It was going to change the world, right? The euro? Perhaps you've heard of it? Terra Luna type fractals here, man. It's like the double top of double tops, just like the what's 4 hour. It's the inverse of the US dollar, man. I can't believe it. I think there could be some follow through here. So it's like no bearish divergence at all on the MACD histogram, but then you go to the RSI and it's like impeccable. It's like rare, very, very real bearish divergence from one high to the slightly higher high, lower levels. And you are in the bearish control zone, and in fact, you've kind of like back tested the bearish control zone threshold here, and you're sitting at like 37.5, so that's not really great RSI. This could be like looked at maybe as a bearish dragon. What happened if that is the bearish dragon? You've broken the spine, and now you're working on the tail, the beginning of the bearish dragon tail. I would think the target from here, unless there's just sheer outperformance, right? This thing is so freaking bullish that there's so much demand that the sellers cannot push the price to rival the March 15th low, and also the key inflection point that they back tested and held. That's great. That's pretty bullish stuff. But after that happened, exhaustion was presented on the RSI, and you started rolling over, falling below that January 30th high. So I would think like maybe below that level, you've got that's a major level, dude. Probably the target. What's up, Matt? Thanks for the 20 super chat. Appreciate it. Thank you, Matt. right? So, I mean, of course you could pivot and rally and keep going higher. And that's a very real possibility. Let's see how much performance the sellers give us, right? With the slightly higher high,
Mitch,
with the bearish
AI
divergence.
taking over the world, I wonder if we could look at an AI and robotics. We check out bots.
We can check out bots. Thanks, Gold Sheep, for 15, man. Sure. We'll do it. Yep. That's all I can tell you, dude. Dragon performance could be limited if the DXY wants to continue to dump. DXY has been rallying, so I think if like it was just going to run to like the next big level, then you're talking like 2.3% downside from here. Not really that big a deal. Let me just look at this real quick. Okay, let me knock it out. Let me check my notes here. Yeah, very, very bad, boys. Okay. And unfortunately, life comes at you fast. In these market conditions, it really does. I find no type of like fulfillment or happiness to say that your bullish abandoned baby that was almost confirmed never caught follow through. In fact, it inverse follow through. It straight up today invalidated that argument and had its lowest daily candle close since like May 9th. And what kills it for me and makes me not want to own this asset anymore that fast, yeah, I know, is the sheer fact of the inflection point from history. I am like, you know, I really do treat historical ice lines like religiously. Like when it comes to a trading plan and all that, like I have, and like I will change my tune though if we keep whipsawing and we get back above that level. I'd probably re-enter. But when you're below that level, I cut my losses so fast. I don't want anything to do with the asset until you're above that, and that was so weak, man. And then again, you got these index funds, man, that are like so exhausted. They've been on a bear market rally for an entire effing year. And they're stalling out technically. And that just doesn't bode well for anything. Especially, probably would affect Chinese S stocks worse than anything in the world. And that rejection of the 200-day moving average and the bearish engulfing candle, that's a sign of weakness in my opinion. And then look at there's no follow through on the bullish divergence, and really like it's dead below $81 completely. But to me, that type of weakness right there, and also using my critical thinking of analyzing the index funds, I don't want anything to do with this. But if things in the coming days or weeks improve with the new data that's presented with that improvement, my entire opinion would change based on the new data. But until then, I can't want this until clearly, undeniably, assertively above 86.75 for real, and holding it and regarding it as support and breaking the 200-day moving average and staying above it. I need that. If I can't get that, I don't want it. That's Baba. And that's the beauty of, man, that's the beauty of having ice lines as like being religious about ice lines from history. I mean, those things make it so easy to decide what you want to do with your trading plan. Do I want to abandon that plan? Oh yeah, I mean, my God, that right there below that, yeah, I wouldn't want it. I wouldn't want to own it. Nope, the downside potential is too high. It's way too high. I mean, you go to $58 from here if things really deteriorate on the collective market. So, dude, that right there is brutal. And then it's even more brutal right here. These two developments in the past week those developments are so strong that they make me say that the argument is stronger to not own the asset right now than to own it. Even with this awesome momentum shifting structure, and just in a couple days, you could rally and get back above those levels, and then my whole opinion will shift. That's what inflection points, that's how important they are. That's how critical they are. Bad, very, very bad, boys. Okay, all right. Let's go to bots. Golshi, man. Been live 1 hour, 46 minutes. You enjoying the live stream, like button, the bell, so thanks for being here. Okay. Well, the bots been taking over. Looks just like any, oh my God, dude. Look at that one major peak from 2018. Oh, they pay a 0.17% dividend, bro. Well, that's good. So I'm just plotting the key levels here. There aren't many, and you're very close to one. Seems kind of like you're stagnating on the momentum, right? I've seen this before. Not kidding, man. You have like these extended rallies like this. You wouldn't pay attention to the histogram. So it's like this first high, big spike in positive Momo. Then you have your higher high, and it's like bearish divergence. And then it pulls back a little bit, but underperforms massively. Then rallies again to make a slightly higher high, and it's about the exact same as that second high. But both of these highs are lower than this high. That's like a continuation of bearish divergence, right? It just continues on. You know, you go from class A bearish to class C bearish. Stagnation, complacency. That is exactly what this effing market is. I mean, this market is right now, I think this past year is designed to get exit liquidity. But hey, man, higher highs are lows, so who am I to say? You know, there are gaps to fill. Let's see, is there a channel here? You can get cute with it. Something like that. Yeah, here's your uptrend, bro. All right, well, I mean, here's a demand line all the way at 25.29. Let's see if we can adjust this. Let me get another touch. That third touch there. Ooh, I like that. That looks really good. Okay, so you can get like 3 touches on the bottom. Get 1, 2, and then 3 here, and then kind of like 4. Like right, the probably the bots themselves, like the algos, just flirting with that demand line and rallying. And pay attention to this heart line here. Look at the touches of the heart line. That's freaking gorgeous touches there. So you know, failure to even see that this time. You've been in an uptrend, and it's long extended, and again, you bottomed out in October, you've been rallying. So there's not really like the strongest argument here, you know, like it's not like I mean, the Dow Jones has an impeccable technical argument for downside soon. Bonds isn't, it's there, you know, not all the variables are really there. It's been running like tech has, and no, I'm not saying tech's had the strongest argument for downside. It's been the best performer. And this is part of tech, of course, right? Global robotics and artificial intelligence ETF. It's been a good run so far, but are you above 2740? No. Have you made a higher high than these highs from March of last year? No. How deep have we gone from the all-time high? High to low. You're at a 38% retrace. So that just means like you're in the golden zone right now, right? So a common retrace after a crash, major drawdown. This is it. This is your zone. So if the market conditions are like really, really bad, then the retrace would be rather shallow and only retrace 38% from the all-time high to the lowest low after. All right, well, you're there. You made like a 40% retrace, and that's about it. 40% retrace. You never were able to test the 2018 high. Never made a 50%, 618. Again, this will dump miserably if what we're reading on the index funds is like proper. if the so there's a higher probability that we're reading it's implying higher probability of downside next, maybe a lot of downside next, like the complete conclusion of the bear market rally is upon us type thing. That's where we are right now in time. Hasn't happened really yet, but if it does, these index funds, this is gonna get nuked. This is gonna go to $23 fast, when or if that flush that seems probable happens. Okay, there's your bots. And that was the last request. We did it, man. I appreciate the contributions today and support. Y'all kept me going, man. These requests are pretty intricate to the stream. You know, when no one's requesting anything, it's just me. And you know, the chat is pretty slow. And you know, remember when you're doing a request, when you're tipping for a request, you're saying you value this channel and this community. You know it's crowdsourced. You know how much money some of these guys in this, I've learned, like being around these people, learning how much money some of these people have made from accepting money from crypto projects in order to push those crypto projects on their own viewers. Like, I know I have a better understanding of it now, and I'm saying, like, I have missed out on a lot of money over all this time by denying countless, talking definitely over 1,000 different emails, promotion emails. So it's like when you're tipping, understand, remember what you're doing. It's like the only way, right? Like this community, this and the Patreon, the Citadel, that's it. There's no other way. So I appreciate those contributions, especially in these market conditions. They're awful market conditions. Liquidia. Well, look at this level. It held. I don't know, last time I looked at this. There's a gap fill at 1059. It's a beautiful chart. There's lots of accumulation here. Wow. It's been going, dude. I can't remember the last time I looked at it, but this is, you know, down. It's not really a great time to be requesting it now. I mean, just say, wow, look how beautiful it is. But look at that spring back test in May of 2022. While the whole world was like melting down, dude, this thing has been making higher highs, higher lows quietly. And that is a target up there. Yeah, right in line with that swing low all the way back from 2018. So yeah, really good, man. I wouldn't say there's any entry or anything, but very, very strong. Lots of accumulation like crazy on this thing. Almost like ascending triangle behavior of sorts. If you just, you open your mind a little bit. No, that's like an up thrust, and this is like, look at the back test. You can see it. It's pretty nice there. I mean, you broke out ascending triangle stuff, and I think 1058, 1059 is an adequate target there. And if you ever broke that, wow, look out, another gap fill at like 1380. Right, so those are targets upon you if this continues. Pretty nice so far. You haven't broken this high from August of last year though, so you're very close. Maybe have an alert set up. Do you hear that beep? Highest highs of, the highest. If you hear the beep, it'd be the highest price since 3 years. It'd be 3-year high, multi-year highs. If you hear a beep, you were just pennies away from that. So wow, surprisingly, because in these market conditions, I mean, like, you get things that are going up, but kind of look like major rising wedges and all that stuff. This one looks pretty strong off the bottom here. Pharmaceuticals, remember, they don't make money. They never make money. That's so weird. They never do. They only lose money every single quarter, chat. But here it is. Out of the basement, accumulation. For now, above the 200-day moving average. All right. And you can see Bitcoin 20 was 7,146. Real little ice line up there. A little, not ice line, but just a local resistance. Right there, 27,450. It's just really hard, man, to just stare at this and be like, oh, it's such a great time to max bid on anything crypto. And I hope to God, man, you see, you understand the difference between hoping and just presenting reality. Like, I hope all this is completely invalidated. We get a, whatever, all-time highs on $2-3 trillion market cap now, like tomorrow. And then I get made fun of for, identifying something that many other people around the world can identify and see. I hope that's hope, man. That's not reality. Reality is bear pole, bear flag developed after momentum shifting structure after running up 70% from the October, November lows. And below 200 moving average and below resistance right now. I mean, those are real things. That's real. Index funds stalling out, showing exhaustion, complacency. That's real. Hope and delusions saying, we're going to definitely go to like 1.3x, man. I hope it happens. It's just delusional to stare in the face of all this and say it's more probable that would happen. Okay. It is less probable that outcome would occur, right? Going up next. It can happen. It's just less percentage chance. This is a high probability outcome of down next, big down. But it hasn't happened yet, so we will see. We do not expect it to go down. We do not. We just know it's more probable we'd go down. Eric Crown says 35K in the next 17 days. All right, remind me in 17 days. And dude, I hope it happens, man. I really hope that happens. That would be amazing. I'd be so happy. And I can't wait to be called so wrong for identifying this like an idiot, like being so dumb to say that, there could be some down next. Like 1.03 next. That's it. That's as far as we go with it, demand line. Yeah, like, okay, if Eric Crown says that, then fine. You know what you do? If Eric Crown says 35K in 17 days, then someone just does this. That's all they have to do. Something like this. 35K, huh? Well, let's say 30. We'll just go to, we get 3. Yeah, we get 3 to 1. Just go into 30K. That'd be it. That's what someone would do. If they thought Eric Crown would, if Eric Crown's saying that, then there's a way to strategize it. And it's like this, right? A stop loss somewhere marginally below the key inflection point that's been defended 8 or 9 different times or whatever in the course of 2 weeks. It's pretty simple. That'd be target 1. And then you could target 31, 35, whatever, okay? No, this is a linear scale. It's not a log scale. I got a lot of respect for that guy. And he could be looking at different variables than me that are not just, structural developments on total market cap and stuff. And look, man, if this fails, your stop loss gets triggered, and then let there be no doubt, lower prices, because that support's being broken for real, and we're headed to 23,261, maybe even just 25K. That's it. For me, that can happen. I think it's just like it's a lot more iffy here on Bitcoin than it would be like someone taking a short on the Dow Jones Industrial right now. Like, I think there's so many variables that line up to take a short on the Dow Jones that it's such a stronger argument than Bitcoin long right here. Bitcoin's up 100%, 70 to 100% since the bottom.
Say it. I'm Skinny Pete.
I'm Skinny Pete. Thanks, dude. The 5-man Kings. Take off your beanie with the moth on it. Thank you, dude. Oh, he was in like another movie recently. I can't remember what it was I saw. Oh my God, he was in Skinny Pete. He's a freaking Mandalorian, dude. You didn't know. That's where I saw him. He shows the volume expansion, BBWP, and so on. That's cool. Yeah, and those are variables I don't really look at, and that's fine. And it's not even about being right or wrong, man. It's just about knowing where one's able to strategize an entry, stop loss, take profits. That's all it's about. And one could actually do it on Bitcoin right now, and no one's arguing with that. I'm not saying you couldn't do that. I'm just saying I think it's more coin flip-ish on Bitcoin upside. I think like for the Dow Jones, I think, and I can be completely wrong, but like there's so many variables that are lining up and screaming down next, not up. I think there's more of those than there are variables on Bitcoin screaming up next, not down. You see what I'm saying? So it's like you have finite capital. So you want to allocate your capital to the strongest technical arguments, right? And that's where I go with it. No, Ollie, that's not true, man. That dude's. I think Eric's like borderline genius for sure, man. You watch him, you know, like you can just tell people like some people are just like that. They have like high cognition abilities and all that, and he's got that, and he's like very experienced, and he's been in this world for a very long time, and he's like a blue blood of it. So you know. But you can take that bet, and it's very easy. It's an equitable reward to risk if you wanted to take that bet with Bitcoin. You could. Well, you know, there's a key level at 26,660, and it's undeniable, and it's right there. What's wrong? What is this song though? I can barely hear it, man. Maybe it's too fast. I don't know. It kind of like it's not as good as it was at the beginning, right? Let's just let's switch it up. No, not that part. My God, man. At least we're at the end of the stream. I just want people to understand, man. This is a game of probabilities. It's not certainties. This is not a game of being right or wrong. This is not tea leaf reading. This is not fortune telling in any manner. Oh, he was saying push it, push it. Well, I hope so. I hope the market participants push it, man. I want Bitcoin to succeed. But see, the thing about it is, like, you talk about price on Bitcoin, it's not relevant. The price of Bitcoin is not relevant.
Have you eaten at Red Steakhouse yet? Absolutely delicious.
Chris, no, I haven't, but I should. Red Steakhouse, I like that color. All right, I'll put it on I have a notepad of like restaurants that I want to try and stuff, so I will. Thank you, dude, for the recommendation. And I want Bitcoin. I mean, the buyers have been defending. Literally, the buyers have been defending this level virtually every single day since May 12th. So we got 11 days of buyer defense at a key support. And at this point, it's key support, right? Because of how many times the buyers defended it. And if that's real, then yeah, I think on the daily, there's pretty much nothing till 28.8. I think that would be your first target. If this actually held. Look, it's your first level of positive momentum. If this holds, first level of positive momentum on Bitcoin since April 16th. So you got to wonder how. I mean, of course, if the bids came in, this would expand each day, and you get a positive histogram island and stuff. But hasn't really happened yet. But it very well could, and I hope it does. Okay. I want this to be like, hey, the banks are failing, the stock market's dumping, and guess what's inverse correlated? Bitcoin. All day. I'd love that, man. I'd love to go live at 5 a.m. because Bitcoin's up 10%. The stock market's crashing. That'd be the best stream of my life. All right. So I'll leave you all with that, okay? Been a pretty good stream, productive. I would say we covered a lot today. And there was a lot of value in today's stream and education. So, hope you enjoy the rest of your evening. I really appreciate the likes, love, support, contributions, everything in between. Join the Discord if you haven't. If you really want to support this community. then you join the Patreon or the Citadel, right? Joining the premium Discord. In the Discord, trade setups, education. You get access to all my charts. Every day I'm spamming charts. Spamming charts all over the stock market, some crypto. I mean, everything, man. I try to that's my job, scanning charts. And like presentable ideas for reasonable road to risk trades all day, every day, night and day. I'm there. I'm posting stuff, right? You know how active I am. I work really hard. So that's the best way to join, or best way to support this community is by joining the Citadel, the premium Discord, or the Patreon. They're the same. So don't join the Patreon until the first of the month because of the billing cycle there. But yeah, you can do that. It's in the Discord. So I'll just be back. Till next time, respect the TA.